Okay, welcome everyone to the Trade Thirsty event, the secret NYSE indicator that predicted the Corona sell-off. Let's do a quick sound check. This is Mark Helweg with Top Trade Tools today, with you guys talking about a really special stock market indicator that I think you're really going to enjoy. So let's go ahead and do a quick check to make sure you guys can see the opening slide and hear me as well. If you can type in a yes in the question box, then I'll know my tech is working. For some reason on my side, I can't see what slide you guys can see. So hopefully everybody can see the opening slide and hear me as well. So yep, if you can type in a yes, that'd be great. All right, we are ready to kick things off. With your permission, I'll take questions. I'll take most of the questions at the end here, just to make sure we allow ourselves enough time to get through this. But yeah, for whatever strange reason, I cannot see the slide that I've got up. So I'll trust you guys to tell me if for some reason it's not advancing here. All right, yep, it looks like you guys can. Let's go ahead and again kick things off. I'll take questions at the end, and may try to fit a few in the middle as well. But I have a lot of slides to show you today, so I want to make sure we give ourselves enough time for that. So again, welcome to the secret NYSE indicator that predicted the Corona sell-off. My name is Mark Helweg. My background is primarily in the hedge fund industry. You guys should all see the bio slide right now. But primarily been the senior strategy developer for a number of hedge funds and have been a speaker at various events, including Bloomberg International events, as well as domestic, and have authored a book with John Wiley & Sons a number of years back that was featured in Barron's magazine. And so that's my background, very passionate about chart and technical analysis and trading strategy development. So that's where I come from. And this project, funny enough, was something that I really never even planned on sharing. In fact, the funny story behind this whole thing, and you'll see it here in a second, is that this was something I was creating for my trading and really our hedge fund. And I shared a video on this not too long ago, and also was promoting a webinar for the same night. So a bunch of people got confused and came to the webinar and thought I was talking about this indicator, which I'll show you here in a minute. And they were mad at me because I wasn't talking about that, but I wasn't advertising for it. So I knew that a lot of people were interested in this, which is kind of funny. So that's how it all got started. And so I'm talking about it right now. It's really interesting and it's been amazing on the year so far. So very timely in terms of what it is. Okay, so I just advanced here to the risk disclaimer slide. I'll quit announcing that, but if you guys don't see that, the slide's advancing, let me know. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. I'm going to show a number of hypothetical examples showcasing the power of this indicator, and make sure you understand that hypothetical or simulated performance results are not actual performance results. So they have certain limitations. Unlike actual performance records or results, simulated results do not represent actual trading. They're good for modeling, so we can see how certain indicators or certain methodologies do in the past. Thanks, Bob, and everybody else for chiming in as well. All right, so let's go ahead and dive in. Something happened on the New York Stock Exchange back on February 24th. Unfortunately, most investors missed this massive clue. Most investors didn't know that coronavirus was going to become a major problem. And if I'm honest, I didn't predict the coronavirus pandemic either. But there were clues out there. There were clues that something major was about to happen in the stock market. Clues that most investors missed as they went around about their daily lives. Something happened on the New York Stock Exchange again on February 24th that ended up being incredibly meaningful if you knew what to look for. And so this again ended up being incredibly important if you knew what to look for. Something suggested stocks were about to turn lower. I shared what I was seeing with a friend of mine in a casual telephone conversation, and to my surprise, my friend actually took action. This is an email I received from my friend, and you never know where these conversations will lead, but here's how the email reads. Hope all is well. Just wanted to send you a thanks. It took a while for the global epidemic, which again, I did not predict. I just predicted a downturn in stocks. but your advice about moving to cash to prep for a correction has been a small miracle for my eventual retirement. I'm up at least 2x in my funds and wouldn't be there if it wasn't for your recommendation to move to cash. Now, the funny thing is the call had nothing to do with that, but inevitably a lot of calls that I'm on lead to the markets, and friends and contacts and social acquaintances will ask what my opinion is. And so in this particular conversation, it wasn't about that, but it led to, what do you think the stock market's going to do? And funny enough, I was seeing indications that the stock market was going to take a downturn, and I'll tell you exactly how I knew that. And I shared it with this friend, and he actually took his entire retirement account and moved it to cash. So he dodged the entire down move of the coronavirus. And that's what really motivated me to share more about this, because I think it can be incredibly powerful, both from a trading perspective and from an investing perspective as well. But I ran a simulation because I was curious. He said it made a massive difference in his account. And for a $100,000 account that started just a number of years ago, you can see that the difference from the peak levels all the way down to the lows, if you will, of the coronavirus move were significant. So it's $206,000 all the way down to $101,000 if you stayed in the stock market and rode the move all the way down. So the difference was striking in terms of whether you stayed in the market as a buy and hold strategy, whether you took action like my friend and actually got out of the stock market. The coronavirus pandemic tanked the stock market and ushered us into a new normal for investing. And pandemics is something we've heard talked about for many years, but it was hanging out there, but never seemed like it would really become a problem. Well, now we know it is a massive problem, and something as investors we've got to start watching out for. Very few investors were prepared as the coronavirus meltdown exposed a serious flaw in how most people invest. And by the way, if you're a trader, this has serious trading applications too. I'll show you how it applies to both investing and trading as well. Most financial advisors want us to ride out big stock market sell-offs, but this could be disastrous for people approaching retirement. As I said, I just showed you that graph. I mean, cutting your retirement account in half is pretty significant and pretty scary at the same time. So the buy and hold strategy that our financial advisors teach is something that, in my opinion, is incredibly risky. So financial advisors do not have the tools to time the markets, and shockingly, most funds out there don't either, because it's actually a very difficult thing to do to some extent in terms of knowing when to get out and go to cash. And this tool has to be the most powerful one I've ever seen in terms of doing that. This means that from our financial advisor's perspective, that you and I need to take the lead in monitoring the stock market over time and safeguarding our investments. I never got a call from my financial advisor to get out of stocks and go to cash. I never have, and I never will. They will never give us that telephone call. So from an investment standpoint, if you have money in the stock market, which most people do in their retirement accounts, that means we have a choice to make. And I'll show you a very interesting way to look at this here in a second. Trying to figure out what direction to trade stocks in is the biggest challenge for traders and investors. It really comes down to, are stocks going higher or are stocks going lower? We can analyze price charts, PE ratios, and economic numbers to try to figure out the direction of stocks. For traders, making money in stocks is about finding the hidden clues to give us an edge over the markets. And by the way, this is advancing my slides are, so if you don't see that, then let me know. So we have to ask the question, what is the most important thing for us to watch as traders and investors? It seems like that ought to be a somewhat of a straightforward question, but it's really not. It's not a 200-day moving average like so many people reference in terms of establishing an uptrend or downtrend. By the time stocks cross over a 200-day moving average, the damage has been done quite a bit to our portfolios. So it's not news on CNBC or the financial networks. Most of that's propaganda these days anyways, it seems like. And even a lot of different technical indicators are not going to work for this as well. This is a special issue that requires a special solution. And so the question is, what is the most important thing for us to watch as traders and investors? And you'll see here in a minute that what I'm going to show you is by far, in my opinion, the most important thing for us to watch. It's the one fundamental thing that drives every single bull market and bear market in history. And it's how the overall market is trading, and probably even more important than that, it's how institutional traders are trading as well. So they drive the markets. Institutions, Wall Street, big funds and institutions literally account for almost 90% of the daily volume in the stock market. The retail traders, we do nothing. We mean very little in the stock market in terms of what it does over time. So what if we could know what all the other traders out there in the stock market are doing? And more importantly, what if we could know what the Wall Street institutions are doing with their trading? So it's not the news, because it really has to do with how the big institutions that drive stocks higher and lower, it's how they interpret the news. It's how they respond and what they end up doing that really drives stocks higher or lower over time. So when the majority of traders are buyers or institutions are buyers, the strategy would be very simple. If we knew that, then we could simply buy ourselves. Or when the majority of traders or investors out there or institutions are sellers, then we ourselves could sell as well. Big up moves in stocks are always led by strong institutional buying. The most powerful sentiment is not what traders are thinking, but it's what traders are actually doing with what they're thinking. It's where they're putting their money in the stock market. Unfortunately, we can't see the research of other traders and investors in the markets, but we do know that the stock market moves higher when there are more buyers than sellers. And we also know that the stock market moves lower when there are more sellers. If only there was a way we could see in real time what all the other traders and investors are doing, especially when I say that, especially the large Wall Street institutions. If there was a way we could see or know what they were doing, wouldn't that be powerful information? Interestingly, the New York Stock Exchange created a way for us to see what all the other traders and investors on the New York Stock Exchange are doing. I'm going to tell you why this is incredibly significant, having to do with the New York Stock Exchange and having to do with this measure as well. This is the New York Stock Exchange. The average daily trading volume on the NYSE typically ranges between 2 and 6 billion shares. It's massive amounts of trading and investing happen through that exchange. It's by far the world's largest stock exchange by market capitalization of its listed companies at $30 trillion. So the New York Stock Exchange is the cornerstone of the stock market. Every day, the NYSE or New York Stock Exchange has approximately $200 billion of trading volume. The trading on the NYSE often sets the tone for the entire stock market. So if there's going to be a bull market, it's going to be very apparent on the New York Stock Exchange. If there's going to be a bear market or selling, or if large institutions start dumping their stocks, that's going to also be very apparent on the New York Stock Exchange as well. The NYSE created a powerful tool for us to see what all the other traders and investors are doing in real time. It's called the NYSE tick, a valuable measure of short-term stock market trading activity. Now, if you've seen the tick, this is not what you think. All right, it's really very little of what you think here. I'm going to tell you how this indicator holds the key to what large institutions are actually doing in real time in the stock market. So to understand what this indicator, the tick, is doing, you have to understand the idea of the bid-ask spread. So every single stock out there has what's called the bid-ask spread. And what this means is that the most competitive price for sellers, the lowest asking price, is going to be listed as the ask, and the highest bid or the highest buyer price as a limit order is going to be posted out there as the bid. So it's important to understand this concept, because this makes a big difference in how valuable this tool is. So active buyers are not the ones who are displaying their bid as a limit order out there. Active buyers or engaged buyers are the ones that want to buy bad enough to where they're actually hitting the ask price. All right, this little distinction makes a big difference. So active, or what I'll call motivated buyers, are the ones not putting limit orders out there necessarily. It's more putting market orders out there and actually hitting the ask prices, if you will, and driving prices higher. On the flip side, motivated or active sellers are the ones selling and hitting the bid prices. They're not the ones out there listing their sell orders at the ask price. Those are not the motivated sellers. It's the ones that are driving prices down, selling at the market and hitting the bid prices. And this is what's being measured by the NYSE tick. So the NYSE tick shows us in real time the net number of upticks, which are motivated buyers, minus the downticks, which are motivated sellers on the New York Stock Exchange. So this becomes, because of the way they measure this, incredibly meaningful. So this is what it looks like if you were to throw up the NYSE tick, and they call this an index, not an indicator. This is a feed of what's happening on the New York Stock Exchange. And the idea here is there's a zero line going across this white line. And when the orange reading, which is almost looks like an EKG here, goes above that, that indicates there's more buying activity than selling activity in the New York Stock Exchange. And when this index goes below the zero line, that indicates that there's more sellers. So if you look at this indicator right now, if you're like me, it's hard to read sometimes. All right, so it's not necessarily very easy to look at and understand what it's saying. And I'm going to show you why it doesn't matter here in a second, but because this is not what we're really going to be interested in reading. But this is what it is if you were to put this on your chart. And this is generally measured on an intraday basis. So a lot of people will look at this like on a 1 minute or 5 minute or 2 minute chart or 15-minute chart, but it's most often used right now on an intraday basis. But I'm going to show you how you can use this both short-term and long-term to get incredibly powerful information about what institutions are doing. So this is what a lot of traders out there will do. They put reference levels around this NYSE tick index. And what they do is the white line, again, down the middle here, let me color it white here. That's the zero line. That's your reference level. So anything above that is net buying, more buyers than sellers. Anything below that is more sellers than buyers. So the top upper yellow line here indicates that there's heavy buying happening. So it's an index level, NYSE tick index level of plus 600 is the upper yellow line. So if prices reach up to that, then we would say heavy buying is happening on the New York Stock Exchange. And then the upper magenta line here is what we'll call extreme buying. And a lot of short-term traders will use this as almost a mean reversion level where prices are expected to reverse. So almost like an extreme overbought condition where prices are likely to reverse, even though from my experience, that's not necessarily an indicator that has worked well enough for me to use it that way. The lower yellow line here is negative 600, and that's a lot of people will consider that to be heavy selling. And then the negative 1000 level, the lower magenta line here, is considered to be extreme selling as well. So again, guys, a number of questions are coming across, but let me hit these at the end if you don't mind, just to make sure we give ourselves enough time to go through this. I promise I will answer all the questions. So this is what a lot of traders will do. This is not what I'm here to show you today, but I just want, if you're not familiar with the NYSE tick, this is what a lot of traders will do to measure this index, if you will. So in this particular case, if you eyeball this with these reference levels, you can see here that for a while, period in the middle of my chart, a lot of the values are coming in below the zero, which tells us that there's more selling than buying on the New York Stock Exchange. And then you look at a major index like the S&P 500, this is the SPY, you would expect short-term prices for the stock market to go down. And sure enough, it does, shorter term. So this is a subjective way of using this information to know that stocks are likely to go down. And you can read this, and I know a lot of traders do, and consider this to be valuable information. And it can be, but it's subjective many times when you use it this way. So many people consider the NYSE tick to be the most important or most powerful sentiment indicator for the stock market. With time and practice, you can learn to read the NYSE tick indicator. But again, that's not what I'm here to show you. I'm here to show you something much, much more powerful. This index, the NYSE tick index, can give you an edge about where stocks are heading intraday if you get good at reading it. But from my perspective, it can be difficult. It can be noisy to interpret the NYSE tick many times. In fact, the majority of times it can be very noisy and hard to understand. This definitely takes a gray area judgment call. So the question is there a better way that we can use the NYSE tick index data? This is powerful data. Is there possibly a better way for us to use this than the noisy EKG orange chart that I showed you a second ago? By knowing in real time if there's more buyers or sellers in the stock market, especially more large institutions, I had to ask the question. And this is me doing my own research. And honestly, I was probably, I didn't know whether I was going to share this or not with everybody else. It's just, I'm always doing research, and I just don't share a lot of stuff that I do over time. But this ended up being incredibly significant and a lot more powerful than I ever would have guessed. So the question is, can we use this inside information about buyers and sellers, institutional buyers and sellers, to create a powerful trading strategy? That's what I was interested in. So I'm interested in a black and white way for us to look at this information and say, I should be a buyer or I should be a seller. And so that's the question. Can we use this information that way? We know that many traders read the NYSE tick to find short-term intraday trading opportunities, but what if when there are more sustained or motivated buyers out there, according to this information, then we ourselves jump on the stronger party. We jump on the more powerful force in the markets and we ourselves become a buyer. Or what if we use this information, if we're able to determine there's more institutional selling out there, very simply, we sell as well to give ourselves an edge. So I decided to research if the NYSE tick indicator held hidden clues about the direction of the stock market. My experience told me that the NYSE tick index was good for more than minute-by-minute intel on what the stock market was likely to do intraday. I wanted to see if the NYSE tick held important clues to significant shifts in buying and selling in the stock market, because at the end of the day, it should be pretty simple, right? If there's more buying, if there's more buying power in the stock market, stock prices should head higher. If there's more selling power out there, then the stock market overall should head lower. So deciphering the hidden clues in the NYSE tick was an intriguing challenge for me, and that was really the driver behind my research as I was doing this. Now, again, my entire career has been spent developing trading strategies for hedge funds. It's just what I do and what I've done. I really enjoy doing it. I'm a huge market nerd, and so this was just another project for me venturing into is finding out if this information could be valuable for us to use. So I decided to research the hidden clues buried in the NYSE tick index to see if there was something more to this index. The advantage is to trade in the same direction as the majority of buyer or traders or investors out there. So if the majority of institutions are buying, then that should be our bias. We should be looking to buy ourselves or looking for bullish setups. If the majority are sellers, then we should be looking to sell short, or at least buy put options or get out of the long positions, if you will. So jumping in on the side of the majority of traders as part of a trading strategy, or majority of institutional investors as part of a trading strategy. So here are the two questions that I had to ask heading into this project. Question number one is, can we measure sustained buying and selling using the NYSE tick data? Because most traders out there are using this for very short-term type trading. Second question is, can we create trading signals from this? So I'm not a big fan of gray area stuff, even though we're all forced to use it. Now, there's definitely power that we can get from that. But as much as I can make things black and white in my own trading, that's what I like to have. I want a trading signal that I can use that's proven to make money in the markets over time. So that's really what I was after when looking at this stuff. So question number one, first thing I tackled is, can we measure sustained buying or selling in the New York in the stock market using this NYSE tick indicator? So after many hours of testing the NYSE tick, I discovered that shifts in buying and selling often preceded major moves. Very interesting stuff. Every major up move in stocks has this one thing in common. The buyers were stronger than the sellers, and we could quantify that. We could say that our readings were showing that much more powerful buying was coming into the stock market. Every major down move, including the coronavirus sell-off that just happened, has this one thing in common. The sellers were stronger than the buyers. That makes perfect sense, doesn't it? So my goal was to translate, if you will, this noisy EKG indicator into the indicator down at the bottom. And that's tracking more aggregated compounding, if you will, buying or trends in buying. So if we look at the top indicator, this orange NYSE tick index, it's noisy. I can't see by eyeballing this necessarily that there is a lot of buying heading into the market. But once I build my tool out that starts to aggregate this in the right way, then it creates this indicator down here that I call the top tick tracker. Now, the reason I call it top is because of our brand Top Trade Tools, but now we're looking at shifts in buying power and selling power that we derive from this NYSE tick index. So while this orange EKG indicator can be noisy, hard to read at times, now we're creating an indicator that we can turn green when the buyers are more powerful, if you will, or turn red when the sellers are more powerful. So it becomes an incredibly potentially powerful way to look at how to trade stocks. So I created an indicator to measure sustained buying and selling in the New York Stock Exchange using the tick, and I call this indicator the top tick tracker. And interpreting this is incredibly easy. If there's more buyers out there, the buyers are more powerful, if you will, the indicator turns green and identifies a shift or persistent buying that you can't see with the naked eye looking at the NYSE tick index. And if the sellers are stronger, then this turns red and you can see it dropping over time. So everything started with this indicator I call the top tick tracker. So we can now measure sustained buying and selling in the New York Stock Exchange using the NYSE tick index. We're no longer relying on our way or our ability to translate this noisy looking indicator. We're now looking at ways where we can take that powerful information and create a very easy to read tool. But the question is, can this information actually help us trade and invest in the stock market, right? I mean, it may look cool, it may look like it'd be helpful, but at the end of the day, I'm not interested in that. I want to know if this information can really offer us an edge as traders and investors. So question number 2 is, can we create trading signals? Can we create a very powerful filter or trading signals that we can use to trade and invest in stocks? So I created some simple rules for a NYSE tick based trading strategy. Here are the rules. And this makes perfect sense, doesn't it? So rule number 1, if institutional buying is or the buyers will call it are stronger, then we take a buy signal, right? If my indicator turns green showing that the buyers in the New York Stock Exchange, which we've established is the exchange in the stock market, is the cornerstone of the stock market, if the buyers are stronger, then we're buyers. If it turns red, where we can see the sellers are more broad-based sellings happening on the New York Stock Exchange, then we ourselves would turn and look for shorting opportunities. That's it. Those are the rules. So I made it as easy as green buy and red sell. And again, guys, I'll get to questions here at the end. But the question has to be asked, can making money trading stocks be as simple as jumping on the side of buyers when they're stronger or jumping on the side of sellers when they're stronger? So I decided to run some tests with the new tick trader indicator that I created from the tick tracker. I'll show you how it works in a second. Using hedge fund backtesting technology. So that's what I've had over my entire career. And I was interested in seeing if this could actually create a powerful way to trade the stock market. So I decided to use 5-minute price bars to track the buying and selling activity or shifts in buying and selling using or from the New York Stock Exchange data or the NYSE tick index data, getting powerful stock market information about shifts in strength between the buyers and sellers. Interesting, I discovered from optimizing the best period to track sentiment, the shifts of 20 hours were fairly meaningful. So these are pretty good results. Now, since then, I've actually discovered some other shift, we'll call it periods of time that are worth tracking, but the 20-hour shift was very interesting. So what I wanted to do is I created a simple color bars trading strategy that I called the top tick trader. And all this is when my bars turn green, I want to buy because it shows that there's more buyers out there in the New York Stock Exchange. And when the bars turn red, I'm a seller. So here's what it looks like. So if you look at this data, if you will, you can see that when the sellers are kicking in, they're more powerful. We can start to see this from a new indicator I created. And you can see that early on back in February, this date that I talked to you about, we could see that heavy selling was starting to come in to the New York Stock Exchange. So when I was talking to my friend on the phone and told him to start dumping stocks, I was starting to see this indicator flash a warning sign that the large institutions on Wall Street were starting to dump their stocks. There's no other indicator out there that was telling me that. This indicator, I could visually see that there was massive institutional selling entering the stock market, and this is what's required for the type of meltdown to happen that we just saw. So this becomes incredibly powerful potentially, both as traders and investors. But how does it do if we use these color bars, well, like the green bars buy, red bars sell, as trading signals? So I tested the SPY, again, using a 5-minute chart, and my look back period, my aggregation period was 231, which is about 20 hours. And I didn't factor in commission slippage. As slippage should not be a factor. It's a very liquid market, and commission, it's commission free for a lot of brokers now as well. So for the past 12 months, interestingly enough, this was my equity curve. And so this actually is a really nice equity curve, taking the buy signals from the New York Stock Exchange and profiting, if you will, when the buyers are stronger, selling signals when sellers are stronger. So this made 9,700 over the past 12 months. I was very intrigued and really surprised that this could be such a powerful trading strategy. So next step was, how would it do over the 24-month period? If 12 months did well, how would 24 months do? Surprisingly, it did really well. So the profits jumped from $9,000 up to $16,737. And more important to me is how the equity curve looks. So the equity curve is a powerful picture of how effective a trading strategy is, if that makes sense. So this is this is very nice looking equity curve that's trading based on the shifts of buying and selling. So I decided to go back in time and test 36 months back. And 36 months back, we're even more profitable. So I made $18,436 trading 100 shares of the SPY. So this is really encouraging to me that the results were very positive. But is the S&P 500 somehow special, or would this work on other stock indexes as well? So I decided to test the DIA to see how this would actually trade with the DIA. So here's what we've essentially done. So we've taken this hard to read NYSE tick index here at the bottom, we've translated that into our tick tracker, and we've made color bars. So red is sell short, and green is buy, right? So very, very simple. So you can either buy and go to cash, or you can sell short when it's red, and you can go long when it's green. So that's how simple this is. None of this is optimized. I'm using the exact same settings as well. So going back in time for the last 12 months in the Dow Jones Industrial Average, this was profitable, made $8,608, very encouraging. Past 24 months, it made $15,067, and then jumping to 36 months, made $17,580. Now, as a side note, the best results were with the DIA, the Dow Jones Industrial Average. The equity curve is absolutely beautiful with this, and this information that we're getting from the NYSE tick and ended up being incredibly powerful, especially with the DIA, so that which is the Dow Jones Industrial Average Spider, or the ETF. So those were the results for 36 months, and I've even gone back more than that. I've gone back 20 years. They've been very, very good. The results have over time. What about QQQ? What about the NASDAQ? I mean, NASDAQ is traded on a different exchange. Can this powerful information we're getting from the New York Stock Exchange help us make trades, make profitable trades on the NASDAQ? I'm not optimizing anything. Red bars mean sell short or go to cash. Green bars mean buy. And here's my results over 36 months from the NASDAQ, still very encouraging. So we make upwards of $12,925 trading 100 shares of the QQQ. So it ended up being very powerful as well. I wanted to also test the IWM, which are the small caps. And so I did that, ran the test, same exact rules, red bars sell, green bars buy, no optimizing whatsoever, getting our powerful information from the NYSE tick. Ran the test, and this one I would say was the weakest results out of all of them, but still ended up being profitable. So made $7,000, and the equity curve, not great at first, but still profitable. So the top results I would say is the Dow Jones is first, and then the S&P 500 came in second. NASDAQ is third, the least of which, in my opinion, would be the IWM or the small caps, which makes sense. So the top tick trader put up great results with the stock indices that were tested. Now, here's a side study that I did that I wanted to test. Can we actually use it for this information to trade individual stocks? I wasn't expecting anything here, to be honest. I mean, I thought, well, probably not, but it'd be interesting to see, right? So we can get, can we use the powerful NYSE tick information to also trade stocks as well? That's what I wanted to find out, because we could prove that this was very powerful in helping us trade the stock indexes, or the broad stock market, if you will, but can it help us with individual stocks? So trading stocks with the top tick trader, no optimizing whatsoever, same settings as I just used to test the indices. I decided to start with Amazon. So here are the results for Amazon, same exact rules, red bar, these bars are red if we're detecting broad-based selling on the New York Stock Exchange. We're sellers of Amazon, or we go to cash. Or if you want to buy, then we wait until the bars turn green. That's all we're doing here. And it's not an indicator based on anything that Amazon price action is doing. It's an indicator based on what the New York Stock Exchange broad-based selling or broad-based buying is doing. So here are the results for 12 months. Shockingly, it did really, really well. So it made $133,000 trading 100 shares of Amazon, and the equity curve looked really, really nice. Now, Amazon's a very high-priced stock, but the results are really good. So what about 24 months? The results and profits jumped to 199,000 for 24 months. Equity curve still looked really good. Had a little bit of a drawdown here early on. What about 36 months? Jumped ahead for that. Profits jumped yet again to 217,000. And the equity curve shockingly looked really good. Now, if you're a trader, this has very important implications because this may provide us with an incredibly powerful filter that we can use to strengthen our buy setups, like our different bullish patterns that we use, or even buy signals that we use. When this is green, when we're detecting broad-based buying on the New York Stock Exchange, that could strengthen our buy signals that we have with other strategies as well. Or in this case, I'm just using that information as a trading or a standalone trading strategy. So that ends up being incredibly powerful as well. So what about other stocks? I decided to test another number of other stocks as well. So let me go ahead and run through those. This is the result from Netflix. Again, the exact same rules, no optimizing whatsoever. It's that look back period of 231 bars with the a 5-minute chart here. And this is what we get. The red bars sell, green bars buy. And Netflix ended up making $53,905 over the past 36 months. Now, again, I'm not factoring commission, but commissions have kind of gone away anyways. So this is a very, very nice equity curve as well. What about other stocks? Let me just fly through a couple other ones I tested. Now, this was something I did not expecting any type of good results here, but I was shocked that it actually worked out pretty well for a number of stocks. Here's Google. Again, red is strong selling on the New York Stock Exchange. My bars turn green when there's strong buying. Here's the equity curve for Google, made $90,000. I didn't think the results were quite as good as they were for Netflix and Amazon, but still made $90,000 over the past 36 months. Here are the results for Facebook. Just jumping forward here, 36 months, made $16,975. Not a bad looking equity curve, still very powerful, still very helpful as a filter. Here's NVIDIA, just jumping forward here, trying some different stocks. NVIDIA made $31,599. You can see right here, same settings, no optimizing whatsoever, same type of testing rules. So very effective for NVIDIA as well. What about financial stocks like credit processing with MasterCard? MasterCard surprisingly made $12,000. Not quite as good, in my opinion, as Amazon or Netflix or NVIDIA, but still ended up making nice profits, especially over the past 18 months. Now, here's one. What about Chipotle Mexican Grill? You wouldn't expect this to necessarily be a good strategy for that, but it ended up being a great strategy for Chipotle and made $73,641. So you can see here, equity curve is really nice, very consistent over the past 36 months. Again, I'm just flying through here, guys. Let me just show you a few more. What about Bank of America? Here are the results for Bank of America. And then $2,700. Bank of America is a low price stock. Great looking equity curve, very helpful as well. What about Morgan Stanley? You know, for financial stock. Morgan Stanley did pretty well, a lower price stock, $4,002 of profits. So not bad, good looking equity curve. JP Morgan Chase, just again, I'm flying through a bunch of results here, guys. Give ourselves plenty of time. Really nice equity curve here for JP Morgan. Ended up making $8,444. And the crazy thing is, all these buy and sell signals are based on the broad-based buying and broad-based selling on the New York Stock Exchange that we can now see because we figured out a way to crack the code on how to use the NYSE tick index data for a more powerful application. Here's Pfizer. What about pharmaceutical? Pfizer had great results as well, up $3,286. Now, why is it? Why is it that we can use this broad-based buying or selling on the New York Stock Exchange to trade individual stocks? It really has to do with these massive funds out there. So they're never, you know, if they're bullish, they never buy one stock. They're always buying a basket of stocks. So stocks are highly correlated in general to each other because either institutions are buying across the board or they're selling across the board. So it would stand to reason that a lot of stocks would actually do quite well with this. So I decided to try one more. I tried the FXI, which is the China large cap, and it didn't work out as well as the other ones. I don't recommend it for this. This ended up making $1,902, but it's correlated, but not correlated enough. So I wouldn't use this information to trade some of the foreign stock indexes or indices, like especially the FXI China large cap was not great. So it's not going to work perfectly for all stocks, but for a lot of your FANG stocks and your major blue chips, this information can be incredibly powerful. So the top tick trader proved to perform well as a trading strategy. Now here's another question here for traders. What if we decided to use this powerful information from, let's go back here, from the NYSE tick as a trading filter? All right, what do I mean by that? The question is, can we create a filter on what direction we should be taking our signals based on the NYSE tick to show the direction we trade a strategy in, right? So if it's green, if we see more broad-based buying, we only take buy signals. If it's red, then we only take sell signals or buy put options. So I created another NYSE tick indicator I called the top tick heat map to serve as a filter. Now, the reason why I could use the color bars, but in this case, I'm going to have a lot of signal arrows around the price bar. So I just want a simple heat map down the bottom, giving us the same information. So green is telling me there's more broad-based buying on the New York Stock Exchange. Red is telling me there's more broad-based selling. And so what I'm going to use this information for is I'm going to only take buy signals when it's green and only take sell signals when it's red. So we could only take the buy signals again when the buyers are stronger, or only take the sell signals when the sellers are stronger. It's all about how do we make more money trading or investing. So this could give our trading strategies a massive edge potentially. So I wanted to run some tests to see if this could be as powerful as I think it would be. So I have to have the baseline. So I'm taking a normal momentum strategy. I'm not optimizing it, but I want to take all the signals, right? Both buy and sell all the time. That's our baseline with number one testing. And then number two testing, we're now using this top tick NYSE broad-based buying and selling information as a filter, and we're only trading in the same direction. So I first started out with a SPY over the past 12 months. Here's the baseline, here's the momentum indicator. Now, we're never going to trade this way, guys. This is a 5-minute chart. This is a momentum strategy. You're just going to get chopped up in general if you try to trade like this. But for the purposes of testing, this ended up being very powerful. So this is all the signals, all the buy and sell signals. We're not pretending to know whether we should be buying or selling. This is no filter, right? This is our baseline. And this is what we end up getting. Shockingly, it was profitable. It made $2,241, but the equity curve's really ugly here. You never want to trade this. This is our baseline study with no filter whatsoever. Now, what about if we used the powerful NYSE information as a filter? So now when this information's green, like this first, call it 75% of my chart here, you can see down here at the bottom, the heat map is green. That tells us only take buy signals. And then when it turns red over here, it kind of goes back and forth a little bit. Now we only want to take sell signals when it's red. So here's what it does to our results. Our results actually end up increasing by over 100%. And now the equity curve is much more acceptable. So this ends up becoming really intriguing as traders, using this information to tell us what side of the stock market we ought to trade in. So here's a side-by-side comparison, no filter to the left, really ugly equity curve, and then we dramatically improve our profitability by introducing this filter and only trade on the powerful or the side of the more powerful institutional traders on the New York Stock Exchange. So taking a step back here, what are we doing? We're saying that if the institutions are coming in, now we can see what they're doing, right, with these new powerful indicators that have decoded the NYSE tick index. Now we can take this information and say, okay, we now see that the powerful Wall Street institutions are net buyers or net sellers, and we're only going to trade on the side of the market that they're trading on. So this is all designed to give us a massive edge. Let me go ahead and jump forward here, show you a few more tests. What about going 24 months back? All right, the baseline test, taking all the signals with no filter, was about break even, made $98. What about if we implement this filter and take signals there? Believe it or not, profits continue to skyrocket. So if we trade on the side of the institutions using this powerful NYSE tick data, our profits now jump to $8,316. Do a side-by-side, or let's jump to 36 months here, and I'll show you side-by-side equity curves. For 36 months, even go back further, believe it or not, now the momentum strategy starts to lose money. And we kind of expect this. We'd never traded this way, but it gives us an idea of what the baseline would be. Now, how much do you think these signals are improved if we only take these signals in the direction of broad-based buying or selling on the New York Stock Exchange? So now our equity curve is much more profitable. And this tells us as traders, this is really intriguing. Now we know that we've got a powerful way to determine whether we ourselves should take buy signals and join the more powerful force in the markets, or when the institutions are buying, we're buyers, when they're selling, we're sellers. What about other stock indices? So the results for the Dow Jones Industrial Average going back 36 months, not too pretty, taking all the signals here with the momentum strategy here, ends up still making $2,000, $2,200. What about when we use the filter? profits now skyrocket. They're up 300% from there to almost 10 grand if we're trading only on the side of the large institutions on Wall Street. What about, here's a side-by-side, by the way, equity curve. Really not acceptable on the left-hand side. We never trade using that, but it's a good baseline. Now, if we introduce the powerful filter, only trading on the side of the institutions, right, when they're buyers or sellers, we get a much more powerful result here with our momentum strategy. What about the results for QQQ? By the way, you can trade options with this too. I know traders who are using this to trade options right now and doing really well. So they've given me very positive feedback. Here are the results of the QQQ. This is the 36 months with no filter, right? Just taking all the signals, made $2,886. But now you introduce the signals, right? The filter, and it now profits now jump to 7,765. So not quite as good of results as the Dow Jones Industrial Average of the S&P, but still very acceptable. Still very powerful filter here for the NASDAQ as well. And here's a side-by-side comparison of the equity curve. So dramatic improvements by trading with the more powerful, institutional traders on Wall Street. What about individual stock? I just decided let's try it with Amazon to see how that would look for 36 months. For the momentum strategy by itself, that ended up making $33,489 over 36 months. What about if we only take buy signals when institutions are buying or sell signals when institutions are selling? Profits jumped to $115,835. Huge difference here. And when we think about it, guys, trading and investing is all about giving ourselves an edge. So this is a very powerful tool that tests out to be incredibly powerful as a directional tool to tell us, should we be buyers or should we be sellers? So this is a side-by-side comparison. Left side, very ugly. We never traded this way. Momentum strategy irks out 33,000. Now that we combine the filter in here, much more attractive equity curve, we make 120 grand instead. So what is that? 4x the profits. So not a bad deal. That's what we want to do as traders and investors. So with the top tick heat map filter, you can trade on the side of the winners. The winning force are the institutions buyers or are they sellers? And guys, I'll tell you this, if we all try to trade against the institutions, we're going to lose every single time. They control the direction of the stock market. Every strategy I've ever created that trades with the institutions on stocks represents a much more powerful edge. All right, so let me go to questions here in just a second. Lots of questions coming across. For those of you asking how you can use this information or get this information for your trading, let me just show you quickly how you can get this, and then I'll go to questions for everybody else. Tradable signals using the NYSE tick literally happen all the time. The top tick trader is a great strategy for stocks, options, ETFs, and you can also use it for futures as well. Stock indices certainly is very powerful. If you're an options trader, you can use this tool for trading options, and you can also use it for trading futures as well. The top tick trader shows us when the majority of institutional traders and investors in the market on the New York Stock Exchange are buyers or sellers. That's how I knew to tell my friend to dump his stocks back in February, because I now have this powerful information to see in real time when the institutions are either buying stocks or selling stocks. So the top tick trader helps identify the best direction to trade stocks in, which is a $64,000 question that we all want to know. So now you can see the hidden clues in the stock market and potentially avoid the coronavirus meltdown with your investments. Or if you're a trader, you could be buying put options and profiting as well. So this is my friend's email again telling me, thanks for getting me out of stocks. I didn't advise him. Well, he took my advice to get out of stocks and go to cash, shockingly, and he dodged the entire sell-off with the coronavirus because he went to cash with his investments. But more than that, as traders, we can use the powerful information as well. So he says his investment portfolio is up 2x where it would have been had he stayed in. So two very different approaches, not only to investing, but to trading as well. So smart money, the large Wall Street firms understood early on that coronavirus was a huge problem and they started dumping their stocks. Nobody could see that unless we have this powerful tool that can now see in real time what they're doing on the New York Stock Exchange, which is what they're doing across the board. Now we can see the early warning signs of what all the other traders and investors are doing in the stock market. So let me show you quickly for all of you interested in getting this tool for your trading or investing. Let me answer the quick question of you guys asking how to get this. We've made this available. So this tool has one setting. It's the aggregation number. It's how many bars you're aggregating with intraday data. Now, I recommend using this with the intraday data because it's a lot of data points that we can use to either detect broad-based institutional buying or selling, turning our bars red or green from this noisy EKG looking indicator on the bottom. So we've translated that and tapped into the hidden clues there to create these powerful indicators. It's multi-platform license as well. I'll show you here what platforms we created for, but if you're a stock trader, like ETF trader, a stock options trader, stock index trader, or even stock index futures trader, this can be pretty powerful information across all time frames, not just intraday, but swing trading or even investing over time. This can be incredibly powerful as well. So let me go ahead and show you here the platforms that we created, guys. This is multi-platform. So if you get this indicator, you get it for any of these platforms you want. TradeStation, Thinkorswim, TD Ameritrade, Ninja 7 and 8. I didn't put that up there. It's both eSignal and Infinity IAT. So you have a multi-platform license, which means that we're traders and investors. We get it. If you want to download it for TradeStation and Thinkorswim and Ninja, you can do that for the same price. We're not going to nickel and dime you with this stuff. I also created a powerful workshop, Mastering the Power of NYSE Tick. It's about a 3-hour workshop in 2 to 3 hours. And here's what I go over. I go over the NYSE Tick defined, measuring the buyers and the sellers in the stock market using the NYSE Tick, the top tick trader trading with validated sentiment. It's what the institutions are actually doing. Mastering the top tick trader, tracker, heat map, and delta. There's a fourth indicator that I've added to the bundle. Strategies for trading options and futures as well. And then key NYSE tick look back periods, aggregation periods, using the top tick heat map as a trading strategy filter, all designed to put the odds in your favor. So let me quickly show you guys who are interested in this how to get this, and then I'm going to go straight to questions. So for those of you who want this, normally these strategies or indicators go for the top tick trader normally goes for $497. Top tick tracker normally goes for $497. The top tick delta goes for $497 normally, and the top tick heat map normally go for this. And mastering the NYSE tick workshop normally goes for $297, guys. We're slashing these prices down 80%. You're getting all of this for $447.30. So that means that you have all 4 of these indicators up here: the tracker, the trader, the delta, and the heat map, and you get instant on-demand access to the NYSE workshop that's already been recorded, so you can get immediate access. Simply go to our short link here, www.toptradetools.com/go. And guys, I wasn't even, honestly, truth be told, planning on sharing this this indicator until a bunch of the people on my website started asking for this. So I was actually surprised at the results. They ended up being incredibly powerful for a directional filter in the stock market, and now it's available for everybody. 859-963-3445. Our team is standing by, guys, to help you with your questions. So let me go ahead and just copy this link into the chat box here, and I'm going to take questions. We'll jump over as well. One question is, can you use this for Forex pairs? Absolutely not. It's not for Forex. It's only for stocks. So it's just different. Like I wouldn't use it for commodities. I would use it for stocks, right? Stocks, yeah, like large caps, FANG stocks, and most, stock indices, stock index futures, and stock options. You can use this for it. Now, this can be used not only as a strategy, in a standalone strategy, but you can also use it as a filter. So let me go ahead and throw a chart up here so you guys can see this. So you should see, I'm leaving the short link up here, but you should see my chart right now. If you guys don't see that, let me know. So here's the DIA, all right? This is using the a 30-minute aggregation, which is also good. By the way, you may say, well, what aggregation periods can we use? What I've done is I've actually gone back and had my team do the research, and then this is what you get. So you get all the research, guys, on this. Let me show you what this looks like. This is our one-page document for 1-minute charts, 2-minute, 3-minute, 4-minute, 5-minute, 10, 15, 30, and 60. 60 we don't recommend, by the way, and the reason why is because of the hours of the New York Stock Exchange. It opens at 9:30. So use 30 minutes and below, and you can use this. Again, you don't have to be a day trader. This is great for swing trading, day trading, and even investing. Like the 272 look back period for 30 minutes is a great investing time frame because it's a long-term shift. So you get this. These are all the optimized settings. This is already up in the resource page. But looking right now at the, let's see, this is the 30-minute DIA. Let me go ahead and put the results up here. So this is, let me go ahead and just throw this up here. This is the strategy. If you were to take the buy signals based on the green or broad-based buying in the New York Stock Exchange, you can see this here very clearly on the chart with the delta. I love the delta right here. You can visually see broad-based buying on the New York Stock Exchange, right? It makes it really easy to know what side of the market to be on. And you could have avoided the entire coronavirus sell-off. So if you look at the performance study going back for a number of years here, this is going back to 2010. You can see the equity curve here. I mean, really incredible all the way through current, how from an investing or trading standpoint, this filter is done incredibly well. This equity curve is a lot better than any buy and hold strategy you could have used. So that shows that. And then if you look back, how did I know that the coronavirus sell-off was coming? Simple, because I started to see the red broad-based selling coming into the stock market right here. You can see that right here very easily visually. So this turns red. All these indicators are telling you slightly different things. Okay, so the top indicator is called the top tick trader. This turns your bars red when you should be selling or go to cash, or turns your bars green when you should be buying. This is a longer term setting right here. You can actually use a shorter term setting that does very well as well. The center indicator is the top tick delta. That shows you the magnitude of buying and selling. And you can see the institutions were heavy sellers for obviously driving prices down for the huge sell-off in stocks we saw for coronavirus sell-off. The bottom indicator is like it's a building indicator. It shows you the ongoing buying and selling, and it translates this powerful NYSE tick index information into readable form. So the top indicator is just a color. Are the buyers or sellers stronger? And you can make it whatever color you want. If you don't like red for sellers, make it something else. The second indicator in the middle is the magnitude, and the bottom indicator is more like the directional. You start to see the directional buying or selling. So what is it doing right now? Let's take a look. So right now it's red. This is a longer term setting, by the way. So it just turned red, and you can see really since the highs back in early June, it's really been net more selling. So we've seen more selling come through, and it's been creeping up a little bit here, but I'm a little suspicious of that. So right now, according to the color, I would be looking at some sell signals or some some shorts here as well, or bearish setups. Why do you show the current screen, or don't you show this current screen? Can you guys see that? I should. So Tom, hopefully you can see that. So this is the current screen right here. So this is as of today. It's red. So this is a longer term setting, right? Now you can track the shorter term setting too. So that's the powerful thing. Remember my sheet I showed you guys? So we can actually go and track, the settings for 30 minutes. Shorter term is 42 bars back. That's 20 hours, right? It's one of the better settings. So I can actually change this. All these indicators, look back period, which we give you, that's all the ones we've tested. Here's 42 hours back. And now my delta indicator is a lot more shorter term, right? Now you can see the shorter term buys and sells in the stock market. And I can make it shorter term as well with my lower indicator. You get the idea. So it's pretty cool. You can use it for longer term filter or something that's a lot more reactive. Now here's the interesting thing. If you go back to the absolute low here of the stock market, here's the crazy thing. The low of the coronavirus sell-off was right here around the 23rd, 24th of April. Well, guess what? That's when your shorter term measure of NYSE buying, that's when that kicked in. So if you would have had this indicator, you could have seen visually that the New York Stock Exchange, the institutions are starting to buy stocks right at the exact low, almost down to the 30-minute price bar in the New York Stock Exchange. So, and this actually tests out really well as well. So if you take signals based on this, if you want to be a trader and be a little more reactive, you can go shorter term, and it ends up being very profitable as well. Tom, can you see that okay? Hopefully you can. You guys can see my drawing here. I just drew on the screen here to show you the shorter term setting in the middle. You can use that as well. Okay, so Leon's saying if it's guaranteed, I never said guaranteed anything with this. I'm just showing you the study. You're going to have losing trades with this over time as well. There's no strategy on the planet or indicator on the planet, guys, that's going to give you 100% winning trades. So I don't know when you say guaranteed, I don't know where that comes from. I didn't say that. Those words didn't come out of my mouth. It's always probability. So it's always based on probability. So again, guys, this is a very short-lived promotion. We brought this back for Trade Thirsty. And again, the link you want to go to is the www.toptradetools.com/go. Okay, that's where you can get the 80% discount. Even if you buy this stuff for 22 or 2,285, I think it's an absolute steal. I mean, how much is it worth if you would have gotten out, for example, of your investments and gotten the cash like my friend and avoided the entire coronavirus meltdown, because you can now visually see that the institutions turned sellers. So how much would that be worth? This is great. Lisa says, got to run. Look forward to the recording. More information. Yeah, Lisa, you're going to love it. I think it's one of my favorite indicators, and I didn't expect it to be, but and I also didn't expect it to share it with traders and investors. But people at Top Trade Tools were showing a lot of interest, so we decided to go ahead and make it available to everybody. So this is the promotion, and this is 80% off, guys. Very limited time offer. Richard's asking, is it possible that because the past 3 years are strong? Yeah, so Richard, I showed you the testing of the last 10 years. So this is it right here. So this is, let me show you it again. This is going back for 10 years. I've actually gone back for 20. And so the results blow away what you would have, made had you done the buy and hold. So you can see a lot more smoother. You would have missed out if you're kind of buy only on the investment side of things. You would have definitely missed out on, if you will, the big coronavirus sell-off. And then as a trader, you could have used that information to start shorting as well and make money on the downside and the upside. Now, one indicator, one strategy you can use with this, guys, is when you see like back on February 24th, check this out. So let me just show you something really quick. So this is the 24th of February is when this turned red. Now imagine if you would have bought the VIX. So let me jump over here to the VIX, VXX, on the 24th of February. All right, so let me throw this up here. If you would have turned into a buyer, let me put the daily chart up here, on the 24th of February, the VIX, knowing this information, right, what would that look like? Well, here's the date right here. So here is the 24th of February right here. So you see my vertical line? You would have bought the VIX at a closing price of 1767. The VIX ended up going to highs of 78. So you literally are making 300% in about 3 weeks. So if you would have bought that, you could have bought options and absolutely killed it on that. Made maybe a couple $1,000%, right? Buying like the Delta 30s. But if you would have just bought the VIX, right, which is the fear index, when you start to see the institution selling, this is one way to use this information. It can be incredibly powerful. So that's one way that I like it as well. No, Leon, this is so you own it once you get it. There is no annual licensing agreement, but yep, it's all yours. You own it forever. What platforms is this made for again? Let me go ahead and show you. You guys should all see my screen here. Let me go back in time, go back to the previous slide. This is just kind of jumping back here. So the platforms that we developed this for are TradeStation, Thinkorswim, TD Ameritrade, or TOS, Ninja Trader 7 and Ninja Trader 8, I should pencil those in here, and 8, and then eSignal and Infinity IAT. So these are all the platforms that you can get it on. If you don't have any of these platforms, you could actually download a free version of TOS, Thinkorswim, or Ninja Trader. So there's a way to get a free version of these. They used to be, at least. The last time I checked, there was. So, and then if you put $500 in TradeStation account, you can get TradeStation. So I recommend getting one of these platforms, guys, and use these, and you can install the indicator. If you need help, simply give us a call, and we can help you walk you through how you install it. Really, really easy. All right, so we're here to help, and again, you get the Mastering the Power of NYSE Tick. It's about a 2.5-hour workshop already recorded. You can watch it here in a few minutes and take advantage of the 80% discount savings. So this is a trade thirsty 80% savings promotion, if you will. Can you use it on the ES? Great question, John. So yes, you can. Now you can't, let me tell you what you cannot do. So let's go back over here for a second. You cannot use this indicator on the same chart as an ES. You use it side by side. So what you do here is, let me go ahead and just show you quickly what this could look like. So give me a second here. So what you could do is, let's see here, I'm opening this up. Let me just, so here's a side by side of what you can do on like a workspace with trading futures. And I'm a huge futures trader, so I get what you're asking. So assume for a second that you're trading, using the the ES on the right-hand side, right, the futures. Now, the reason why you can't put the indicator on most platforms on the same screen is because this is derived from a Eastern Standard Time New York Stock Exchange that's only open for business hours. The futures are a 24-hour market that's based on Central Time Zone. So there's a time zone and an open mismatch here, but the color is all you need. So right now, if I looked at the color here of the top longer-term top tick tracker, let me go ahead and change the delta back to longer term here. Give me a second here. Back to a 272, then you would say it's turned red, and you could start looking at some shorting opportunities on the ES. Now, it's been green for a while, and recently you could have used this to take some of the buy signals here. Like for the green, it's been green, so you would have taken this buy signal here and gotten out, you go flat, take this buy signal here, gotten out, go flat, etc. So that would be the filter heading into this recent period that you could have traded with the futures. But this is how you set it up. You can use, and the color is really the main thing you're looking for, telling you whether the buyers are stronger or sellers are stronger on the New York Stock Exchange. Does that make sense? All right. What other questions do you guys have? Yes, you can use it on futures, but yep. So just use it side by side, just like this. And really, again, it's the color. It's what's happening. Yeah. So Ari, give us a call. I think we can get you. We can help you with PayPal. Yeah, John, happy to help with your question. So, yep, give us a call, 859-963-3445. We can walk you through. And guys, this savings is going off the board. This is a very limited time special. We brought it back for Trade Thirsty. Jeanette gives us a call, and she's family to us. So we're bringing this back for Trade Thirsty and for you guys. And this is literally going off the board very quickly. So if you come back to me and this special's gone off the board, it's back at $2,285 for everything here. Guys, there's nothing I can do. My hands are tied. It's limited time. We want to be fair to the people who are taking advantage of the promotion, but take advantage. It's 80% off. I could show you single trades in the last couple of days where you could have made, more money than this costs on a one lot futures contract. So it's not hard to find these big winners in the direction of the filter, but it's an incredibly powerful tool. So yep, it's one of my favorite. I love it. The reason why I like it so much, let me talk about this, is why I like it so much, is because it's different. All the rest of my tools, like let me show you a screen with a bunch of my tools here, and you can see, some different things that I like to use. See here. So here's just a chart here of some of the indicators that I like to use. So these are my tools that I like to use to determine whether to buy or sell. We'll put the stock index up there, right? So I look for swing trading opportunities. Now, one of my favorite setups here on a daily chart is this one right here. And this is what's called a zero touch. If you've read my ebook, go to toptradetools.com and you can get a copy of the ebook there. I talk about my 6 favorite swing trading setups. Here's a bearish version of that happened in early March. Now, this is when the top tick trader was red. This would have been flashing red. And now I'm getting one of my favorite bearish setups here. This is when I could have shorted the heck out of futures and made a massive windfall profit there on shorting. Funny thing is here's it turning green. So now I've got a bullish setup here, a bunch of bullish setup here on bullish swing trades going up here as this indicator turns back green again, telling us that the buying is coming into the stock market. So you can use it in conjunction with your analysis, in terms of what direction to trade on by simply looking at the colors of whether to be a buyer or seller. So it's really powerful, and it's different. So most of my indicators are driven from price action of the chart that's being displayed. This is not. All this data you're seeing right here is mining out of whether the institutions are more active buyers or sellers on the New York Stock Exchange. So ends up becoming incredibly powerful from that perspective. So what is the lead time? Richard's asking for, what is the lead time to act on the indicator? Well, you could make it more reactive or less reactive. So if you want to, like, for example, these are the longer term settings right here. But if I wanted to use the 42 bar settings here, I could do that as well. So let me throw that up there. It's a good question. This is longer term. Now it's turned red, but it's been green really since early April and just turned red again, right? So you've had a nice run up here with the stock market. But let's take a look at a shorter term setting here. So I'm going to go ahead and put the 42 bars here as my setting instead of 272. And again, you get the setting sheet, by the way, of all of our research. You'll know what this looks like. Let's see, and I'll show you how this this tests up there. So 42 bars, it's giving you a little more reactive time frame here for all of these tools. So if you want to, you can be a lot more reactive with this. So now let me change my strategy and do the same thing. 42 bars back. Okay, 42. All right, so now I'm taking signals based on the 42 bar period. So let me go ahead and quickly throw this up. Give me a second here. And I'm going to, all right, so let me put this up, and I'll put the results up of the 42 bar more reactive period. So just a second here. All right, so these are the results from this strategy of the 42 bars. So, and it's overall, it's pretty good. It's got a little bit of down dip here in, looks like, where is that? That's in early March, but overall does a really nice job of making profitability over time. So is this for day trading? Absolutely. The shorter term one can be for day trading. Now, funny enough, there is the shorter term is now green, slightly green here. So you would be, if you're a day trader, you could be looking at some day trading signals, right? So like, for example, if I'm using the shorter term settings, I can use it for that. I can use the longer term settings as a filter as well. You have complete freedom with how you can use this information, right? But these are shorter term settings that are absolutely valid as well. They test out very well, just like the longer term. And sometimes they're in disagreement. When they're in disagreement, you can simply sit out. You can wait until they're in agreement, or you can use the longer term settings as your filter, which is primarily what I'd recommend. But if you want to use this as a strategy, for example, how does this work on Apple? Yeah, let me put it up there. Let's try it on Apple computer, for example. So I'm going to put Apple up there and see if this information would help us make money. All right, so how does Apple look? Let me go ahead and just pull up the results. Okay, so Apple computer, just a second here, I'm pulling up the results over the last, let's just do a quick test over the last 12 months. And view results, strategy results. So here's Apple. If you just took the green, the shorter term buy results here, you would have made on 100 shares 14,849 bucks. What about Amazon? Let's throw that up there. AMZN, and this is taking buy signals only when the institutions are buying. So here's Amazon. Over the last 12 months, you would have made 86,000 bucks, and this is only the buy signals. It's not even taking the sell signals. Right, so here's how Amazon, your last buy signal for Amazon would have been on the 30th of June at a price of $27.39. It's now at $3,081. So you have a couple $100 for the last signal here in the bank. You see how that works? It's pretty powerful stuff, guys. There's a lot of different ways you can use this to trade. And yes, you can day trade as well. And day trade, what I would do is I would use this as a filter, and then day trade. You could day trade in the direction of this filter as well, as one idea. You could use the more reactive filter here and just take signals, in that direction. All right, let's put up the trade information again. I'm going to copy the link one more time, www.toptradetools.com/go. And that is where you save the 80% and you get all these indicators, guys. You're getting that top tick trader that's calling your bars. That's the one over here on the left-hand side that turns your bars green or red. You get the top tick tracker. You get the top tick delta. The delta is the one over here, the red and green magnitude of the buying and selling. And then you also get the heat map, which is great as a filter. And then you get the workshop, on-demand workshop. It's about 2.5 hours, I think, of going over this stuff in great detail. All of this included, normally $22.85 is now $447.30. You save 80%. Go to www.toptradetools.com/go. All right, guys, that is all for today, I think, unless you have any more final questions. Let's see here, any more questions? Yeah, so let me put up what is the DIA done with the shorter term settings. The Dow Jones DIA is an ETF. Let's just see what has it done. Let's view the results. Yeah, so still profitable. I had a little bit of a dip here. Let's even take it back further. This format, let me take it back for 3 years. So 3 years, let's try that. 3, okay, so close. Let's try this. Going back in time for the shorter term settings. Yeah, I mean, really nice equity curve. So you're making 10 grand. You've got a dip here in April with a gap. I think it's a gapping market open on Monday versus Friday. Overall, really nice equity curve and good profitability. Yeah, you could add. Yeah, you could add volume to strengthen your analysis as well. YM on the 130. So no, this will. If I do that, I can't show a tick chart right now because it's going to bog down TradeStation. But yeah, you could try that. But you want to. The problem is that you want to make sure you use our aggregation periods. So that's an important part of this. So this is the sheet where we show you, look back periods. We haven't tested tick bar look back, only time bar. So you can take the time bar information and trade ticks. Does that make sense? So that you can definitely do that. But I would definitely stick with the time bar periods that we have here on our cheat sheet as well. All right, does the delta indicate the volume? No, it's not volume. It's based on the NYSE tick data. So it's the number of engaged or motivated sellers, we'll call it, versus motivated buyers across the New York Stock Exchange. It's not a volume thing. Yeah, 2 minutes, you could put it up there as well. Yeah, you can definitely trade options. So there's people trading this right now using options instead. Like for example, I'm gonna put Amazon back up there. If you took the last buy signal for Amazon, right, it's kind of calculating here, you could have bought call options right here on the 30th of June. That's when it turned green, if you want the shorter term settings. And you would have made a massive winning trade here over the last couple of days. So, yep, absolutely buy call options as well. Can we get a copy of the video? I think so. You'd have to ask Jeanette, but I don't know if it's been recorded or not. I would assume it has been, but I'm not sure how that works. Give us a call, 859-963-3445. Our team's standing by to help you with your questions. Yes, options, absolutely great for options as well. And stocks. It does work on TOS. Yeah, Dave, it's available on TOS, and you have a multi-platform license. So yeah, you're welcome, Angel. So you can download it from more than one platform. We're not going to nickel and dime you. Your 447.30, you can download as many times as you want. But I would ask you guys this on the honor system, please only use this for your trading. We try to keep our prices very low. We are not getting rich from this promotion. I promise you that. We've got a full-time staff and researchers and everything that's supporting us to develop all this stuff out. And so this is a heck of a discount, 80% off, and available for very short term. You get all 4 of these indicators and the workshop at 80% off. And this is a short-term trade thirsty promotion. You do get the video, you get on-demand video. So once you get this, you're going to receive an email from us, and we'll give you exclusive access to the resource page. And one of the things in the resource page is the on-demand video. I think our team is there probably just for another few minutes. It's getting late, obviously, at night, so they're going to probably cut out. But if you leave a voicemail, if they're not there, Ari will give you a call back if you have any questions. But I think they still could be there right now. So give us a call, 859-963-3445. If for some reason we got a lot of people calling in, then we will return your call. Promise for that. Yes, you can use it for futures, Lisa, as well. And what you want to do with that is you simply want to do kind of a side-by-side chart setup here. So right here on the right side, I've got my futures. Left side, I've got my stocks. So this is what you want to do. So I can put, just for fun here, we'll put up, let's put like a 5-minute futures chart here. So I'm green on the left-hand side if I'm tracking shorter term, and then you're taking your buy signal over here, for the shorter term trade opportunities. If you trade for like tick charts or 5 minutes, etc. But you cannot plot these tools on a futures chart. Guys, just understand they're different time frames. Futures are on Central Time. This is an Eastern Time Zone measure. The NYSE tick measure index is. And also the stock market's only open, as you know, from 9:30 a.m. to 4 p.m. And futures markets are open 24 hours a day, but you can use the color. So right now the color would indicate that you want to take buy signals if you're using a shorter term setting here. Does that make sense? All right, guys, we are going to cut out. I think call it a day. Thanks for coming out. Again, it's www.toptradetools.com/go. I'll copy the link in one final time here before I call it quits. and you guys can take advantage of this limited time offer. And yep, this will be going off the board very, very quickly here. So it's a great tool. I love it. One of my favorite ones. I just created this for our hedge fund, but happy to share tools as well over time that I think will be helpful to you guys as well. And this is one of them. So, and the funny story is, I told this earlier in the presentation, is I actually shared this research and had really no intention of building these tools out to make available for everybody, but it's been working so well, really, and a lot of our members at Top Trade Tools wanted it, so we built it out for them, and then we're just making it available for everybody. So that's where this comes from. All right, guys, that is it. Thanks for coming out, and have a great rest of your day. Good luck trading. Give us a call if you have any questions or about installing it. And again, the short link is where you get the savings, www.toptradetools.com/go. You get all 4 of the indicators in this bundle, guys: the top tick trader, top tick tracker, top tick delta, top tick heat map, and you get the workshop, all combined normally for $2,200, going for $447.30. Yeah, you're welcome, Glenn. No problem. Thanks everyone for coming out. Good to see some familiar faces. And give us a call if you have any questions. And we're happy to also walk you through how to install this as well.